A New York appeals court today dismissed a $500 million civil fraud penalty against President Donald Trump and his companies for overvaluing their properties and financial statements. In the ruling, the judges upheld the fraud judgment, but said, quote, the $500 million to the state of New York is an excessive fine that violates the Eighth Amendment of the United States Constitution.
The case centers on allegations that Mr. Trump misled banks and insurers by inflating or deflating the value of his assets when it suited him and exaggerated his net worth by billions of dollars. New York State Attorney General Letitia James says she plans to appeal the ruling. For more on the impact of the decision, I spoke earlier with former federal prosecutor Jessica Roth, currently a professor at Cardozo School of Law. Jessica Roth, thanks for being with us. We appreciate it.
It's my pleasure.
So this was a lengthy ruling, more than 300 pages. What were the main points of contention among the judges, and how did their differing opinions shape the outcome?
Yeah, so this was a complicated split decision. As you noted, it's over 300 pages.
It's your boy, John Let's Go. Trump's financial empire is collapsing as courts confirm decades of fraud investors are dumping Trump-branded assets, lenders are fleeing, and valuations are cratering. The unraveling exposes that his wealth was built on inflated claims, not reality, and is reshaping the broader market. A New York appeals court upheld the finding that Trump exaggerated his wealth for decades. This isn't some partisan judge making wild accusations based on political bias. This is an appeals court with multiple judges confirming that Trump systematically lied about how much his properties were actually worth. They affirmed that Trump and his eldest sons are barred from running New York corporations for years to come, which is a devastating blow to his business operations. Think about that for a second. The President of the United States is legally banned from running businesses in New York because he's been found to be a fraud by the courts.
We have 3 opinions, and the reasoning of the judges divided 2, 2, and 1. There was one point of commonality among all the justices, and that was that the trial court's order could not stand as it was written. But beyond there, we had disagreement among the justices. The effect of the decision of the appellate division today is to affirm the judgment, right, the verdict against Trump, his sons, their business associates, and their businesses, finding them liable under New York's civil fraud law of engaging in persistent fraud. 2 of the justices thought that actually that finding was supported by the record and was appropriate under the law. 2 other justices thought that the record was problematic and that there were errors in the conduct of the trial and would have sent the case back to the trial court for a new trial. But those 2 additional judges who thought there were problems in the trial decided to sign on to the judgment of the first 2 justices in order to get the case up to the New York Court of Appeals, the highest court of New York, for a final decision.
The appeals court did toss the massive financial penalty as excessive, but that's almost irrelevant to the bigger picture here. The finding of fraud stands. The ban on doing business stands. Trump is a confirmed liar about his wealth, and that's now legally established beyond dispute. Extensive reporting has confirmed that the Trump Organization repeatedly falsified property values across his entire portfolio. Mar-a-Lago, Trump Tower, multiple golf properties scattered across the country. All of them were systematically inflated to secure favorable loans from banks. Trump would tell banks his properties were worth way more than they actually were. He'd use those inflated values to get loans at better interest rates with better terms. And then he'd turn around and tell tax authorities the same exact properties were worth way less to reduce his tax burden.
And the effect of those 2 justices joining essentially in the decision of the first 2 justices is that we now have a majority effectively affirming the verdict of liability against Trump and the other defendants.
Okay, so if the appeals court upheld Trump's liability for fraud, why did it still decide to void the nearly $500 million penalty? Because in theory, fines deter wrongdoing by imposing financial consequences that outweigh the potential gains. And that was the point of imposing this $500 million fine in the first place on the Trump Organization.
So even the 2 justices who would have affirmed the finding of liability based on the record here thought that the penalty imposed by the trial court was excessive and that, in fact, it violated the US and New York State Constitution's protections against excessive fines. They said that it was just vastly disproportionate to any harm caused by the defendants. So although they would affirm the finding of liability, that there was a pattern of fraud.
That's textbook fraud. That's the kind of thing that gets regular people sent to federal prison for years. And Trump did it brazenly for decades across his entire business portfolio, apparently believing he was too rich and too famous to ever face consequences. There's reporting about a crypto shell company buried within Trump's corporate web that had quietly become one of his largest money conduits in recent years. And here's the really scary part that should alarm everyone. It remains completely unclear who is really receiving the cash flowing through this entity. That raises massive red flags about potential money laundering, hidden ownership structures, possible foreign involvement in Trump's finances. Trump is mixing cryptocurrency, shell companies, and deliberately opaque financial flows.
They thought that the remedy for that, in terms of the amount of the penalty or disgorgement of profits, that or ill-gotten gains, as articulated by the trial court, that was just vastly excessive, so much so that it was unconstitutional. But notably, the justices who were prepared to affirm the finding of liability said that the other remedies imposed by the trial court that were injunctive in nature, barring the defendants from holding corporate offices, from making applications to borrow funds, for example, and also imposing an independent monitor on the businesses, that those could be affirmed. So the financial penalties, the disgorgement, they thought was excessive, but the other injunctive relief, they said, was actually appropriately tailored to address the findings of misconduct and to curb potential wrongdoing in the future.
Well, we are all certainly getting a legal education today as a result of all of this. The president crowed about this ruling in a post on his social media site, calling it a total victory. Is that how you see it?
I don't see it as a total victory for the president.
In ways that make it almost impossible for regulators or the public to track where money is actually going. And financial regulators and law enforcement are finally starting to pay serious attention to these operations. A Nobel Prize-winning economist wrote that Trump's financial downfall mirrors what he called the rot at the heart of American oligarchy. He warned explicitly that the Trump bubble is bursting in real time, and the consequences could extend far beyond Trump's personal finances. This is not some random political commentator throwing around opinions. This is a Nobel Prize-winning economist who deeply understands market dynamics and financial systems. When he says Trump's financial empire was fundamentally a bubble built on lies,
because, as I said, the effect of the ruling is to affirm the finding of liability. And two of the justices were prepared to say, and did say in their opinion, they thought that the factual record strongly supported the finding of persistent fraud by the president, his sons, his associates, and his business entities. So I don't think it is a total victory for the president. He's still going to have to go to the New York Court of Appeals to get that finding of liability overturned, if that is the eventual outcome in this case. So not a total victory for the president, but that said, I would say it's a significant loss for the Attorney General.
And as we mentioned, the Attorney General, Letitia James, says she will appeal the ruling. At the same time, President Trump's Justice Department has launched multiple investigations into her, part of a broader pattern of retribution against his perceived political enemies. What are the implications of that dynamic, and how might it affect the likelihood of her appeal succeeding?
It's very hard to say how all of those factors will weigh into the Court of Appeals deliberations on this appeal. I mean, they're going to be looking at the record here of what happened below.
And is now popping? That's a serious empirical analysis based on economic fundamentals rather than political bias. The Trump brand was overvalued. His properties were systematically overvalued. His personal wealth was wildly overstated. And now reality is finally catching up after decades of deception. The timing here is absolutely brutal for Trump politically. It's coming at the worst possible moment. He's simultaneously facing criminal investigations into his administration, cabinet revolts from his own appointees, political prosecutions that are backfiring spectacularly in public opinion, and now his personal finances are imploding in real time while he's trying to govern. The man who sold himself to voters as a business genius who claimed he could run the country like he ran his supposedly successful companies is being systematically exposed as a fraud whose business success was largely fake. The billionaire president might not actually be a billionaire at all once his assets are properly valued and his debts are fully accounted for, and that fundamentally destroys his entire political brand and the rationale for his presidency. Major lenders distancing themselves from the Trump organization is particularly devastating in practical terms because it completely cuts off his access to capital and financing. If banks won't lend to you, if legitimate investors won't partner with you, if nobody wants their name or reputation associated with yours, your business effectively dies. You can't finance new projects. You can't refinance existing debt as it comes due. You can't operate at scale. And that's exactly where Trump is right now in real time. Financial institutions that used to actively court his business and compete for his accounts are now running away as fast as possible because association with Trump has become genuinely toxic to their own reputations. Being linked to his brand now means being linked to documented fraud, to systematically inflated valuations, to potential criminal liability and regulatory scrutiny. Now let's dig deeper into the specific details of Trump's financial fraud and understand why this collapse is so significant and so difficult for him to escape. First, we need to really understand what the judge found and why the appeals court upheld those findings despite reducing the penalty amount. The judge didn't just say Trump exaggerated a little bit or made overly optimistic projections like many business owners do. He found systematic, clearly intentional fraud that spanned decades and touched virtually every major asset in Trump's entire portfolio. Trump would value Mar-a-Lago at over $700 million when he was seeking loans from banks, but the actual assessed value for property tax purposes was only around $30 million. That's not a small discrepancy or a good faith difference of opinion about valuation methodology. That's lying by a factor of more than 20, which is impossible to explain as anything other than deliberate fraud. Trump Tower in Manhattan provides another clear example of the fraud. Trump valued his personal apartment there at over $300 million by claiming it was approximately 3 times larger in square footage than it actually was. According to building records and floor plans, he literally just made up square footage numbers out of thin air to artificially inflate the property value. That's not sophisticated financial manipulation or creative accounting. That's stupid, obvious, easily detectable fraud. And he apparently did it anyway because he figured nobody would bother to check his claims or that his high-priced lawyers could argue it was just sales puffery and negotiating tactics, or that his wealth and political connections would ultimately protect him from consequences. And for decades, he was essentially right about that calculation. The golf properties scattered across multiple states provide yet more examples of systematic fraud. Trump would claim his golf courses were worth hundreds of millions of dollars based on projected future revenues that were wildly, absurdly unrealistic by any objective standard. He'd assume every single tee time would be booked forever at premium prices. He'd assume zero competition from other courses. He'd assume no economic downturns or recessions ever affecting demand. He'd assume perfect weather and operating conditions indefinitely. And then he'd present those completely fantastical projections to banks as established facts and reasonable expectations. Any remotely competent appraiser or financial analyst would immediately recognize those projections as pure fantasy, disconnected from market reality. But Trump's personal reputation, his powerful brand recognition, his aggressive bluster and confidence, somehow it convinced enough lenders to go along with the charade for years. The appeals court upholding the core fraud findings is absolutely crucial from a legal standpoint because it means this isn't some reversible political prosecution or biased lower court ruling. This is confirmed established fraud in civil court that has now survived appellate review by multiple judges. Trump has no more appeals available on the fraud finding itself. This is the final legal determination at the state level. He committed systematic fraud over many years. That's now legally established fact that cannot be disputed. And even though the appeals court reduced the financial penalty from a massive amount to something lower, the actual fraud finding remains completely intact and binding. That's what really matters for Trump's broader business empire and reputation. The crypto operation flowing through the shell company is particularly sketchy and concerning from a law enforcement perspective. Cryptocurrency is already very lightly regulated compared to traditional finance and notoriously easy to use for hiding money flows and obscuring transactions. When you deliberately add multiple shell companies, offshore accounts, and tax havens, and Trump's well-documented history of financial manipulation and fraud, you've got all the ingredients for serious criminal activity, including money laundering. The reporting that carefully notes it remains unclear who is really receiving the cash flowing through these entities is basically a polite journalistic way of saying, this operation looks an awful lot like money laundering to any informed observer. Money goes into the system, gets mixed and moved through multiple crypto transactions that are difficult to trace, and comes out somewhere else in forms where nobody can easily track the ultimate beneficiaries or final destinations. Wall Street's cold, calculated reaction to all these revelations is particularly telling about how bad Trump's situation really is. Financial institutions and major investors are utterly ruthless and pragmatic in their decision-making. They fundamentally don't care about politics, ideology, or personal loyalty to anyone. They care exclusively about risk and return on their investments and relationships. And right now, Trump represents absolutely massive legal and reputational risk combined with sharply declining returns. His brand has become genuinely toxic in mainstream financial circles. His properties are now proven to be systematically overvalued. His financial statements are established lies. Any association with him creates serious legal liability exposure and devastating reputation damage for institutions and individuals. So banks are systematically cutting ties, investors are rapidly exiting any positions with Trump exposure, and analysts are downgrading anything Trump-related. That's the market voting with its feet and its money, delivering a clear verdict that Trump is radioactive. The political implications of this financial collapse are absolutely enormous for Trump and for Republicans generally. Trump's entire political brand from the very beginning was fundamentally built on his supposed business success and wealth. He was a rich guy who could self-fund his campaign, who didn't need donations from special interests, who supposedly couldn't be bought or corrupted because he was already so wealthy. But all of that was predicated on his repeatedly claimed billionaire status and business genius. If that wealth was largely fake, if he's not actually rich or successful, if he's been systematically lying about the core qualification he offered voters, then his entire political brand collapses completely. Why would any voter trust someone who lies so fundamentally about their primary credential for office? This completely destroys Trump's core political identity that he's carefully constructed over literally decades. He's the business genius president, the deal maker, the successful billionaire entrepreneur. That's been his public brand and persona since the 1,980 seconds when he first became a national figure. But now, it's legally confirmed through court findings that his business empire was substantially built on systematic fraud rather than actual success. His wealth was dramatically exaggerated through lies. His supposed business acumen was largely fake. That's not just politically embarrassing or inconvenient. That's genuinely disqualifying for his entire rationale for being president. How can he credibly claim any business expertise or economic wisdom when his own businesses were essentially criminal enterprises built on fraud? How can he propose economic policies or business regulations when his personal finances were lies? The practical impact on his ability to fundraise for political activities is severe and getting worse. Presidential campaigns and political operations need enormous amounts of money constantly. Trump has always relied heavily on his personal wealth for seed funding and on his connections to other wealthy donors and business leaders for ongoing support. But now those wealthy donors are systematically distancing themselves. They don't want to be publicly associated with documented fraud. They don't want their donations characterized as supporting corruption and criminality. And Trump's own actual wealth, whatever it really is once properly calculated, is increasingly tied up in legal battles, judgments, and collapsing asset values. He realistically might not be able to self-fund anything significant. He might actually be functionally broke once all the lawsuits, judgments, and debt obligations fully catch up with him. Trump's legal exposure just keeps expanding in multiple directions simultaneously. Every bank that provided loans based on Trump's systematically inflated valuations now has potential fraud claims they could pursue. Every investor who lost money in Trump-affiliated ventures and investment vehicles might have grounds to sue for fraud and misrepresentation. Every business partner who relied on Trump's fraudulent financial statements in making deals could potentially seek substantial damages. We're realistically looking at billions of dollars in potential legal liability spread across hundreds of individual cases. And Trump's lawyers, even his very expensive ones, can only fight so many legal battles simultaneously. Each case costs enormous money and legal fees, takes time and attention away from governing, and creates continuous negative publicity that damages him politically. Let's talk seriously about how this affects Trump's ability to actually function as president. A president whose personal finances are actively imploding simply cannot govern effectively or focus on the job. He's constantly distracted by legal battles, by emergency efforts to stop asset seizures, by the daily crisis management of his collapsing business empire. He genuinely doesn't have the time, attention, or mental energy for the actual work of governing and making policy decisions. And perhaps even more dangerously, his decision-making process gets fundamentally compromised because he personally needs money desperately. If he's financially desperate, does he make policy decisions specifically designed to benefit potential investors or lenders who might bail him out? Does he trade government favors and access for personal financial lifelines? The corruption possibilities become essentially endless when a sitting president is financially vulnerable and desperate. The broader lesson here about accountability and consequences is actually quite important for American democracy. For decades, Trump operated with apparent impunity, committing fraud systematically while facing no real consequences because of his wealth, his connections, his legal resources, and his public profile. He seemed to prove that if you're rich and famous enough, you really can get away with anything. But now, finally, reality is catching up. Courts are holding him accountable. Markets are punishing his fraud. His empire is collapsing under the weight of decades of lies. And that actually matters for deterrence and for restoring some faith in the system. It shows that eventually, even the rich and powerful can face consequences when they break laws and defraud people systematically. The Nobel Prize-winning economist's stark warning about the Trump bubble bursting needs to be taken very seriously. Financial bubbles don't deflate gradually and gently. They pop suddenly, violently, and catastrophically. One day, everything seems overvalued but relatively stable. And then, seemingly overnight, it's in complete freefall. When Trump's bubble fully pops, when the last remaining investors finally exit, when the final lenders completely cut all ties, when asset values drop all the way down to their actual realistic market levels rather than inflated fantasy numbers, the total losses are going to be absolutely spectacular. We might genuinely be looking at Trump's net worth dropping from his long-claimed billions down to actual millions, or potentially even negative net worth if his debts and obligations exceed his properly valued assets. So what are the realistic scenarios for how this ultimately resolves? One scenario is that Trump's various businesses go into bankruptcy proceedings, either voluntary or forced by creditors. Assets get systematically liquidated through court processes to pay off debts, judgments, and other obligations. The Trump Organization effectively ceases to exist in anything resembling its current form. Trump personally might manage to remain somewhat wealthy if he successfully hid money in protected or offshore accounts, but his public business empire is essentially gone forever. That's deeply humiliating for someone whose identity is so tied to business success, but it might actually be his best realistic option because bankruptcy limits ongoing legal liability. Another scenario is that Trump tries desperately to hold on to his businesses and fights every judgment, delays every payment through legal maneuvering, and the slow-motion collapse continues, grinding on for years. His properties visibly deteriorate because he can't afford to invest in proper maintenance and improvements. His brand becomes essentially worthless. His empire becomes a zombie, technically still existing on paper, but functionally dead and generating no value. That's prolonged agony and humiliation, but it might match Trump's psychological inability to ever admit defeat or failure. A third scenario is that federal criminal charges get filed related to the crypto operations or the underlying financial fraud. Trump suddenly faces potential serious prison time rather than just civil liability. That fundamentally changes everything, because it's not just about money or business failure anymore. It's about personal criminal jeopardy and possible incarceration. That level of threat could potentially force resignation from office, plea deal negotiations, or cooperation with prosecutors against others. That's the nuclear option that could truly end his political career permanently. A fourth scenario is that Trump's financial collapse triggers much broader market corrections and investigations into similar practices across the real estate and development industries. Other wealthy developers and business owners who've used comparable tactics to inflate valuations suddenly face intense regulatory scrutiny. New financial reforms and lending standards get passed in response to the scandal. The entire ecosystem of artificially inflated property valuations and overly friendly appraisals gets systematically disrupted. That's the systemic change scenario where Trump's personal fraud actually ends up improving financial integrity and oversight across the entire industry. The upcoming midterm elections are going to be absolutely dominated by Trump's financial scandal and business failures. Democrats are going to run relentless campaigns highlighting that the business genius president was actually a fraud all along. Every Republican candidate is going to face brutal questions about why they supported someone whose business empire was built on lies. The party that claims to understand economics and business better than Democrats is led by someone who committed systematic financial fraud for decades. That hypocrisy and that association is going to be politically devastating in competitive districts and swing states. Conservative fundraising networks face existential threats because Trump has dominated Republican fundraising for years. Money that would have flowed to various Republican candidates and causes instead got funneled to Trump and Trump-adjacent operations. He sucked up all available donor oxygen. And now that his brand is toxic and his businesses are collapsing, those donors face a difficult choice. Do they redirect money to other Republican causes? Or do they stop giving entirely because the whole Republican ecosystem got organized around Trump? The collapse of Trump's fundraising machine could have cascading effects throughout the entire Republican Party infrastructure. The banks and financial institutions that are now running away from Trump represent a fundamental rejection of his entire business model. These are the same institutions that used to compete for his business, that used to lend him money based on his inflated valuations, that used to partner with him on various deals. But now they've all concluded that association with Trump is simply too risky. The legal liability is too great. The reputational damage is too severe. The financial returns are too uncertain. And once the banks start running, everything else follows. Without access to bank financing, Trump can't make payroll for his employees. He can't pay his suppliers. He can't keep his properties maintained. He can't do any of the things that a functioning business needs to do to survive. The real estate market implications are also significant because Trump's properties are now being revalued downward based on the court findings about his systematic fraud. Properties that were valued at hundreds of millions of dollars are now worth fractions of that amount. And that repricing affects not just Trump's properties, but the entire surrounding real estate market. If Trump Tower's value drops by half, that affects the value of other nearby buildings. If Mar-a-Lago's value drops dramatically, that affects property values throughout Palm Beach. The ripples spread outward from Trump's collapsing empire into the broader economy. The psychological impact on Trump himself is impossible to overstate. He has spent his entire adult life building an identity around being a successful businessman and a wealthy billionaire. That identity is the core of who he is. It's how he defines himself. It's how he justifies his existence. And now that identity is being systematically destroyed by courts, by banks, by investors, and by the cold, hard reality of his own fraud. Watching his empire collapse in real time is not just a financial catastrophe for Trump. It's an existential crisis. It's the destruction of everything he thought he was and everything he claimed to be. And that psychological devastation might be even more significant than the financial losses themselves. The investigation into the crypto shell company is particularly concerning for Trump because cryptocurrency is still a relatively new and unregulated area. Law enforcement is still figuring out how to track crypto transactions and how to enforce anti-money laundering laws in the crypto space. But they're getting better at it every day. And if Trump has been using crypto to hide money, to launder proceeds, or to receive foreign payments, he could be facing serious criminal exposure that goes far beyond the civil fraud findings. The crypto angle might be the thing that finally brings criminal charges against Trump for financial crimes, which would be a devastating development for him personally and politically. The broader economic implications of Trump's financial collapse are also worth considering. If a major real estate empire collapses, it affects construction workers, suppliers, banks, and all the other businesses that depend on that empire. Hundreds of jobs could be lost. Millions of dollars in unpaid bills could ripple through the economy. Entire communities could be affected by the decline of Trump properties in their areas. This isn't just about one rich guy losing his money. This is about the real economic consequences of fraud on a massive scale. The international implications are significant as well. Trump has marketed himself as a success story, a symbol of American capitalism and entrepreneurship. But if it turns out that his success was built on fraud, that damages America's reputation abroad. It confirms the worst stereotypes about American business being corrupt and dishonest. It makes it harder for American companies to do business in countries that are already skeptical of American intentions. It gives America's adversaries ammunition to criticize American capitalism and American values. The historical legacy of this collapse will be profound. Trump will be remembered not as a successful businessman who became president, but as a fraud who built his empire on lies and was finally exposed by courts and markets. That's a legacy that will follow him for the rest of his life and long after he's gone. History will judge him harshly for his decades of deception, for the harm he caused to investors and lenders who trusted his false claims, and for the damage he did to the reputation of American business. This story is definitely far from over. The collapse is still actively accelerating with new revelations and losses seemingly every week. More financial reporting is going to uncover additional frauds and hidden debts. More lawsuits are going to be filed by defrauded parties. More lenders and investors are going to cut ties and exit positions. The downward spiral feeds on itself. Each new revelation leads to more losses, which leads to more panic, which leads to more revelations. It's a vicious cycle that's going to continue until Trump's financial empire is completely destroyed. And the political and economic implications are going to reverberate for years to come.